Morning YouTube. It is Monday morning, a fresh market week. We're going to dive into the charts, give you your updates for what's happening in the broader markets, the equities markets. We'll flip through a few altcoins as well in this video, and we're going to look at the DXY and of course Bitcoin, which controls the altcoins. Okay, so guys, real quick reminder, that join button is underneath the video if you want to come to our trading room, education, community, and trading. And I trade on BITGET. That link is in the video description. You can trade all the alts and you can convert your Tether to USDC if you wish to have that. And they do have some USDC pairs listed as well. Let's go ahead and talk about the marketplace. So the market's just opened. It is roughly, what time is it right now? It's about 9:45 Eastern time. So the market's been open about 15 minutes. And just looking at the broader markets here, let's get an update. The Nasdaq's already down 1%. So let's go ahead and flip here. So let me tell you what I think is happening in the marketplace. Obviously, we found that key support level in the Nasdaq. Got our bounce, but this has been the problem in the markets in this mass dissension, okay? And we're going to go to crypto, guys, don't worry. You've had this broad dissension after this bear market rally, and you're trying to hold a base. And every time you've tried to hold a base so far, you just fall apart. You make a trading range and you fall apart. Well, we don't want to repeat these same steps again. The markets are dramatically oversold, but to be honest with you, that doesn't matter. It doesn't matter if they're oversold. What matters is the market sentiment. What matters is people shifting from growth to value because of the market that we were trading in, which means the spec and tech high growth stocks get hammered when that happens. But markets always rally, especially equities markets. They don't just go straight down, okay? So we're still looking for this rally. We need to see if this base holds. I expect today, tomorrow, maybe even Wednesday to be choppy, just up and down. But what we've done here now is establish a trading range. So we can mark off our trading range. And the reason I expect this to be choppy is because people were stuck here during this decline, right? Especially retail, they're stuck. So any sign of strength, you're going to get selling. The key is, can it be controlled? That's what needs to happen, because if it's not controlled, then it could get a little bit more violent and you start getting these legs down. Now, I don't think the markets have capitulated yet. For those of you that trade equities, VIX, the volatility, we haven't had a day yet where it was above 40 VIX and just massive red candles down. Okay, we haven't had that yet. We've had the mid to high 30s. We haven't gone above 40 yet. I don't think we had a capitulation event yet, which, to be honest, is what the Fed wants. The Fed wants to raise rates and wants to have the markets bleed off, but they don't want these big legs down that scare everybody. These big, I would say crashes, but you already have the Nasdaq in a crash, the Russell in a crash, and Bitcoin in a crash. The S&P was still holding just shy of 20% down here at the base that it found. But as you can see, the S&P as well is struggling this morning. But on the daily time frame, this allows us to mark off our trading range as we have a reaction, a base, and now we have the candle coming back down. So this allows us to mark off our trading range. Now on the 8-hour and 4-hour, you can drill into that and look at those separately. But let's focus on the DXY really quickly. So you guys know we track the DXY closely. I've been trading Forex for, over 20 years. So the DXY is very important. And look at the channel, the DXY here. I'm going to zoom in, but you can see how it's just been in this GAN channel here, currently hitting its head at the top. The reason I zoomed out this way, where the DXY is now at 104.491, this is the highest the DXY has been since the dot-com crash, the run-up to the dot-com crash, to be more specific, okay? So you can see all of these previous events here. The DXY is now higher, going back on my chart all the way to 2015. And if we go all the way, to pull this all the way out here to 2000, okay, the dot-com crash, here you are. So this is stocks at their peak, okay? The 2000 dot-com crash was when tech media, telecom basically brought down the market, overinflated, the first equities bubble in the last 20 years in the stock market, okay? So big equities bubble, it popped, and of course, when that happens, the DXY goes up in value as stocks decline. The same exact steps are happening now. So these bubbles are so important to understand because there's hallmark indicators that tell you what's happening in the marketplace. And look at where the DXY is at 104.506. It is right in this quadrant right here, okay? right in this quadrant, which is why I keep telling you the DXY has more to go up. You aren't getting any all-time highs with the DXY like this, okay? So what we're looking for specifically in the crypto space is we're looking for breakout rallies to potentially long if we can catch them and they have some legs. And then we're looking for the top of these waves, the top of these rallies to short them and ride down with the market, because this is the trajectory of the marketplace for the next few months. The Fed is doing another 0.5 rate hike next month and then the following month as well. So we know for the next couple of months, the dollar should keep increasing in value because the market believes the Fed. The market believes the Fed. They're fighting inflation. The dollar strength is still going up. And if you notice here, you got up to 120. I think we'll get there again. If the Fed actually sticks to it and keeps raising rates, I think the dollar value is going to go up again. And then, guys, when the market starts to recover after the dot-com crash, look what happens to the dollar. Dollars flow back into the market. So you have to understand these patterns in the market, the broader markets, because crypto does not live in its own ecosystem. The money supply for crypto comes from the broader market, comes from retail investing in the broader market and the big money players. This is why be careful who you follow on Twitter and social media. A lot of these people are very young. Some of them are teenagers still. They don't have any experience with the other markets. They don't understand how money flows through the market. And that's how so many people can get burned, okay? So what we have here on the DXY right now, you can see we had our Wyckoff trading range. We broke out. We're trying to form an LPS up here. Let me show you what we're doing. So this is that GAN channel. I mean, look exactly where it hit, right? You know, TA doesn't work though, but it just happens to hit exactly on the GAN line, both candles, and it's coming back down. Let's go ahead and zoom this in. So we have our breakout from accumulation here, and it's doing that rollover. Remember the cup pattern we talked about? You want to see it make this cup type pattern, and then on high volume, now this is a DXY, you can't trade this, okay? This is the US dollar measured against a basket of currencies, but you want to see the the high volume breakout for the DXY and tackle this line. If it tackles that line and goes into the next channel, I mean, look where you can get up to on this channel. You can get up to 110. It just depends where you go up to. You can just keep going up, hitting your head. You're starting to achieve vertical liftoff. I mean, look at the DXY. It had its nice accumulation zone here in Wyckoff, broke out. It got a spring in this case, broke out from the base. Here's your backup, and then shot up to the next accumulation zone, okay? So could this become a distribution? Yeah, but it's not going to, okay? You have to understand the macro market space, and this macro market space is the dollar is getting stronger. Risk assets will get weaker. Okay, so this line is very important because you want to keep the DXY tame. You want as tame as possible. So it'd be great if it can consolidate here for a while, lose some strength, come back, test its base. I just don't know if it will, guys. The DXY is just... Countries are pouring money into the dollar as their currencies depreciate. Inflation is a worldwide problem. Now, nobody printed as much money as the U.S. As a matter of fact, we printed more money than any country in the history of the world since the virus crash, okay? So you have to understand our currency is well overinflated. When I say inflated, I mean this actual supply. 25% of all currency in circulation in the U.S. was printed post-pandemic. But because the other countries are pouring money into here for a bunch of different reasons, because retail, because the big hedge funds, they all believe the Fed's going to fight inflation. This is why the dollar is going to keep rising. The dollar will get stronger as rates go up. And that's what's happening for right now until the Fed is forced to pivot. When will the Fed pivot? When the markets really start legging down. That's when they'll pivot. And we have elections in November. September, the Fed is off. I would not be surprised if they don't raise rates anymore after September. They come back from their vacation in September. So October, we're talking about, oh, we're going to cool off. It looks like inflation's under control. You know, even though gas has hit 2 all-time highs now in the last week here in Florida. So expensive. It's ridiculous. And they don't care about the prices, though. They just want to have the appearance, the guise of fighting inflation. So let's look at Bitcoin. Bitcoin on our weekly, you know, we found that support base there at 25,338. I mean, this isn't hard support, guys. I mean, that's the key thing here. So we're retracing some because the markets are not bullish. We're retracing some. We're not able to hold this 30K as a key support level. Look, Bitcoin has a deeper leg down. Hence, this is why my pattern terminates at 10,591. right? That's the 1618. But I told you, I think it will go beneath that at the end of all of this, okay? Doesn't mean you won't have incredible rallies in the meantime, but that's just an end goal target. But what we're looking for is for Bitcoin to hold something. Just hold this area, let the markets sort out, the profit taking. And if they do get a rally, I do want to see this come up. And remember, if we place our trend-based fib on here, and I hope everybody had a fantastic weekend. I had a nice relaxing weekend. We go from our market low to our all-time high to our current market low. This is where we get these targets, and that 40,694. Again, beautiful target, point of control, peak volume resistance, as you can see by these spiky tops here. And you have the 382 right there at 40,694. And again, you'll start laying on your weekly moving averages, such as the 55 and the 21, all right there. Now, the problem is you got to get there, right? Because we have lower targets on the daily time frame. Already laid this out. This is that smaller wave I showed you guys. If you zoom into the daily time frame and start on the January 24th candle, that's your swing low. Go to your swing high, that 48.2, down to your current swing low. And again, now on the daily, we have formed our Wyckoff accumulation range, okay? And can this flip to distribution? Yes, it can. That's what it did up here. After markdown, the next step is typically accumulation. Think about it. You have an overpriced asset. You sell that asset to take profits. The asset falls to a place of support. People step in and say, wow, I like the price there, and they buy it. That's why it's accumulation. That's the bias, okay? But again, this can easily flip to distribution. You start making steps. You start flirting with the bottom too much, not getting a rebound off the bottom. Just like here, you just start falling apart. And instead of making a down thrust, you just fell down into a new range. So you have to keep an eye on Bitcoin. But right now, just on the daily, you don't have a lot of information. You had your blue candles up that we were looking for, and now you have your reaction back down, looking for a secondary test. So this may end up coming back down to test support. Okay, that support could be right here at that GAN line, or that support could be much deeper between, it could come all the way down to the base again, down to 25. But I do think there's a potential for the markets to settle and rally this week. Okay, so that's what we're looking for. So let's go to the smaller time frame. Let's look at the 8-hour. So 8-hour, we have more candles. On the 8-hour, you can see some more patterns, okay? Law of three patterns, such as three rising valleys. You have your base, you have your first peak. You see that? You have your higher low, your second valley. You have your second peak. The second peak has to be higher than the first peak, and you have to have higher lows. Now you're forming your third valley, which means you need a third peak higher than this second peak, okay? So this needs to come up, and that will be your cup if you can get there. And your cup will come back down, test support, and then that's what you're looking for is that pivot. Again, on high volume, and you want to see volatility spike as well, okay? So when we look at this, volume is low, which is not a bad thing because we want to hold this range right now, okay? You don't want big red candles. You're below the moving average here, the 21 EMA on my volume candles. That's this cloud. So you're below that. So you're having below average volume. ATR, my volatility channel here is starting to go more neutral. This is what you want to see in this situation, and you want to hold this. This is a very bullish pattern. If you can hold this and get that cup, you can get a pivot out. Now I say can because you have to have euphoria in the market, obviously. This candle could just come back down, and then what you're making is a totally different pattern. You're making a double top, okay? So, which would be a bearish pattern if price does something like this. You have your base, come back up, do something like this. This is all you'd be doing. And if you get candles coming down, losing 28, I mean, obviously you're just coming back down into this quadrant. Now, this whole trading range, because Bitcoin is so volatile, don't be surprised if you see Bitcoin test at different points this whole trading range. It's done at every accumulation box. You can go back to the daily and see this as well. Let me pull this down. You can see how we utilize this previous accumulation range. We had our base, had our ceiling, had our secondary test, and then we had volatility, failed breakout, sign of weakness, all the way down, fell through the box, and this is where we're at now. So this is the daily time frame. So again, it's a matter of being patient, understanding that we're waiting for the other markets, but also really just understanding that there's different ways to trade these markets. You can view these on the 4-hour, 1 hour, whatever, but I'm a position trader, a swing trader, and I'm really looking for some big moves in these assets. And for that to happen, we need to have the other markets become a little bit more euphoric. Let's go ahead and throw an angle on here. Let's see what angle we're working with. Get a 45. So to stay bullish, we basically want to stay above this line, which makes perfect sense. We don't want to violate this second valley here. So we want to keep coming up and then creep out, get our cup. Now, again, even on the 8 hour here, we're going to look at the 4 hour. I mean, the cloud's right here. It doesn't mean it's impenetrable. Doesn't mean Bitcoin can't go into the cloud. I'm just saying there's a lot of resistance right here, okay? So when you do this smaller wave projection here on the 8 hour, again, this is a very tight wave projection, okay? But you do the smaller wave projection, you can see you're already struggling at the 0.5 where you wicked it and you fell back down. It's a deep retracement. Remember, trading primary trend in markets is very important. When you're trading primary trend, the primary trend is down. So when you have bullish sentiment form, because you get rallies even in downtrends, you have a bullish sentiment form, smaller bearish patterns can be much stronger on smaller time frames. And it's just the way the market works. If you have a primary bearish trend and you form a bearish pattern like a small double top on a 1 hour, 4 hour, they can actually have a lot more power than normal because that is your primary trend. So it's the difference of trading with the trend or against the trend or counter trend, right? So looking at this again, this is just a lot of work that has to be done, but this is good work so far on the baby steps of what you need to do to get out of this range and try to test some of these resistances. I still like that 34K area. And if we go to the 4 hour, just to give you guys some examples here, and we're going to look at some alts. Looking at the 4 hour, this is the problem that you have, okay? So you have your base. Now the 4 hour, as you can see as well, you're still forming your higher lows, right? So this is still good. And you still have your higher peaks. So this is still good, but you have this bearish red Kumo cloud sitting right on top of you. So lots of resistance. And to give you some idea of why it's difficult to trade in this range, even some indicators like the 5 and 21, right? 5 and 21 gives you a bullish cross here. You got this peak up. It was an up thrust out of the range, and now you're getting the sign of weakness from that up thrust, okay? Also, a lot of these patterns are making different Fibonacci patterns. I'll show you some of that on the altcoins as well. So this is just the trading range that we are in, but again, still holding that higher low structure, which is important, and then looking for a pivot. And as you start looking at the cloud here on the 4 hour, you can see that it looks like it's getting thinner in this direction. So you start looking at these dates. This would be what, like May 20th, May 21st. You know, you may be accumulating for a while, waving back and forth on these smaller time frames, and you got to defeat the resistance on the smaller time frames, filter up to the larger time frames, and then keep moving up. Let's look at ADA real quick. So ADA, and as you can see, this is why I don't spend too much time showing you guys alts, because so many of them are tracking the same way Bitcoin is. Here's ADA on the 8 hour. Look at the pattern it's presenting. There's your low. There's your higher low, and here's trying to hold your higher low. The 3 rising valleys, here's your peak, here's your higher peak, okay? You need to come up, you need to flip 60 cents. You need to flip 60 cents, get your peak, and from that peak, most likely you will roll over and try to make that cup pattern and then get your pivot out. If you don't get that pivot out, you will fail and re-enter this trading range. But this is bullish what ADA is doing right now, okay, on the 8 hour time frame. And again, you want to see that breakout after you form your cup with high volume, and you want your ATR to spike. And ADA, just like Bitcoin, is trading below the EMA line for volume, and volatility is still pretty elevated for ADA. If you look over at Solana on the 4 hour, Solana on the 4 hour is doing the exact same pattern as well. I mean, again, base, low, higher low, potentially higher low, peak, higher peak. Okay, these are all bullish structures that are forming. Solana did get here on the 4 hour a bullish cross of the 5 and 21, but they look like they're almost about to bearish cross. So again, it's all mixed signals, but for me, even on the 4 hour time frame, the trade signal for me is exiting this trading range, holding this higher low here as support, and then looking for your pivot out. That's where I want to trade, right there. Now, if we fail and start rolling down, I want to be able to take a short and ride that down as well. I mean, Solana's had a big move here from what was that, roughly about $36, and now it's back up at 53. I can't believe this thing was what, $250, $275. This is why, you know, only hodl, in my opinion, if you get in at the bottom. Only if you get in at the bottom. If you bought this at 175 and thought you're getting a great deal as it ran up to 250 and held it this whole time, I mean, you are so negative. This is why 2/3 of people are negative in crypto. So, I mean, you just got to be careful with this. And again, let's throw on trend angle here. Let's see where our 45 is. Basically want to stay above this line. I mean, this is what I'm saying. So, Bitcoin looks bearish right now when you look at it. The markets look bearish. They're holding small bullish trends. It's not hopium. You have an established trading range. You need to keep doing what you're doing. Hold this higher low structure, because if you break this and you start coming back down, you sweep this low, then you're in the volatility. That's all you're doing. Your volatility, you might get some down thrust. From the down thrust, you get some signs of strength. If you get an up thrust and you fail to hold a cup, just like you did here, you fail to hold it, you end up coming right back down again in a sign of weakness. So it's all about holding these higher lows, a simple TA principle, and climbing out of the box, accumulating, and then pivoting out. That's how you get movements in these markets. Now, Matic is struggling more here on the 4-hour time frame. If you look at Matic, it doesn't have that higher low. It has the higher low structure, but it's not making the same pattern here, okay? Because here you have, let me turn this off. You have your base, you have your set, you have your higher low, and then you have your higher low. But here you got only one peak. You see that? And then this is lower than the previous peak. So Matic got a sign of weakness after this, pivoted back up, couldn't climb any higher. And it shows it to you in the moving averages as well. In the 4-hour, you had a bullish cross and a bearish cross, all relatively within a couple candles of each other. So Matic is ranging, right? A lot of these are going to be ranging because the markets are pretty flat. We need the markets to move for more price action. Wow, this video is 21 minutes. I apologize, guys. I got my other videos coming out this week as well. Look for those. Be on the equity space, do commodities as well, and just share some more information with you guys. Definitely smash up the likes for me. Hit the subscribe button. I'll answer your comments in YouTube. Talk to you guys later. Have a fantastic Monday, everybody.